What's up, everybody? We're going to be getting going here in just a minute. Markets are moving around up and down. We are getting the setup for this macro breakout that we are waiting on. Doesn't mean we can't have a little bit of a price action to the downside, but we are prepared for it. So hit that like button, hit that subscribe button, throw a 1 in chat if you're ready to get this going. What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily stream. Hope you're all doing well. I am live from Las Vegas from my cousin's studio here, and this is where I'm going to be for the next couple weeks, but we cannot stop doing these live streams, bringing you the goods of what's going on in this market. So if you haven't yet, hit that like button, hit that subscribe button, ding the bell, let me know, throw a 1 in chat if all the audio visual is good. I have a whole different setup here, so got to make sure everything's working on y'all's end. And special shout out, as you see up above me on this side right here, we've got a new channel sponsor that I'm going to be releasing some information on later today on the Twitter, Galactics. And I couldn't be more excited to share what's going on with that and really get you in on something before it pops off. That's what this is all about. So welcome to the BitLab Academy stream. My name's Kelly Kellum. We're getting this going right now. We're going to dive right on into the chart. So we got to talk about what's happening here. 2 days ago, I shared in the BitLab Academy Discord about this level right here. The markets were pushing up in this zone, and I was telling everybody, watch for this as a clear bullish impulse. We wanted to see not only the price action break through this, and then look at this. You got a little bit of resistance here. Rejection, rejection, a little bit of a rejection, and then we have broken through. We're in that precarious situation right now because we broke through, came back, found some support on that, flipping this previous resistance to support. But now we're seeing a little bit of signs of, I won't call it trouble, but there's a little bit of consolidation at this level. But we got some charts that I got to share with you today to help encourage you about what's coming. Even if we get that move down, it's kind of irrelevant to me at this moment because I see what's going on in the macro and I couldn't be more bullish. So let's do it. Let's get in through these charts, these different things I wanted to share with y'all today. Of course, if you haven't seen this yet, this is one of the most bullish things that I've seen so far in the last, since January. And this is the GBTC grayscale flipping from this negative outflow to having that first day of inflow. So all eyes are going to be on this trend over the next couple of days. This may just be one day. We might get a little bit more outflow. It will likely be choppy. Do not let this change your thoughts about where this market's going in the long run. Things are still trying to sort themselves out about what's happening at these levels, especially with this grayscale outflow. But if we stop having all that Bitcoin dumped on the market daily from that grayscale outflow, that will be an incredibly bullish sign for things to come. Now, looking at this next chart right here, okay, this is what I'm talking about. This is those signs of continuation, the pattern, especially the trend is your friend until it ends. And what do we see right here? We see the price action pushing up. This is similar, obviously. This is much smaller time frame right here with this little sideways action, because when we're looking at the macro, where was it at? When we're looking at this larger picture, we see the price action move up, go sideways, wash people out to the downside. Once they're washed out, health returns to the market, and we get another sideways action. Down, wash people out. Up, sideways price action. Down, wash people out, and then it gets very healthy on the back end of what's going on here. Also with that huge impulse of hope and speculation, because this was obviously all before the ETF actually got approved. The ETF got approved right in this zone right in here. But then again, right here, we got the wash out to the downside and then launch up to the upside. We're getting this over and over again. Now, I'm not ruling out price action moving to the downside, but what I'm more concerned with and what you all should be most concerned with is where is this going over time? Not like all of those students at the commencement speech from Ohio where the valedictorian mentioned Bitcoin and everybody booed. Some people might think that's bearish. To me, that can be more bullish, seeing that the mass populace still is unaware of the best opportunity of their life, because that means if you're getting in now, that was a great signal for the majority of people are not really tuned into Bitcoin as they should be. But let me tune into chat here. I got my screen down over here. That's why I'm looking over here. See, we got William Rhodes in the house, Daniel Hong, French Toaster, C90 for the win, Candle Daddy, Ethan Smith. What's up, my friend? Got Alexandra G, I think I saw in here. All the regulars are, this is a family, and I love each and every one of you. But let's continue on with some of these charts, because I got some things that's going to make you more bullish than you should be. But let's just make sure that we have our minds, we have our hearts, we have our strategies in place so we do not get shaken out before the next leg up happens here. I mean, look at how beautiful this is. Do you see this sideways, this push down to the bottom of the range, then launch? This is like, oh my God, it's going to the moon. Oh, you know what? Everybody thought it was going to the moon. So we got to clear up some of that health. It comes down, flushes out, and it's, it feels precarious when you're zoomed in on those 4 hour, 1 hour, 15-minute charts. It feels like, oh, this could have been the end. But I think you couldn't be more wrong having that mindset right now, because there's so much bullishness. In fact, the title of today's stream, the thumbnail for today's stream, we're about to get into right now. But let's talk about that macro picture. We have the fall. Let's start with the winter, the blue. These are these bear zones. See? Then we have the spring, which is next, coming right in here, this bottom where a lot of consolidation. It's marked by finally having that initial move out. See this? Had a little consolidation, final move out of the zone. We had, in this case, we had the FTX collapse right here, and then we had that first move out. But the most interesting thing we're looking to right here is the summer. Not only is it going into summer right now, it's going into that sort of time frame of what happens. And this isn't directly related to the seasons of your life wherever you're living, whether it's hot or cold, summer or fall. This is talking about the zones of explosiveness and breaking downedness, if that's even a word. But these bear markets, winter, summer markets, the summer being a very, very, very bullish. And then, of course, the fall, which ends up being a lot of explosivity, but also marks somewhere towards the end of that cycle. And look where we're at. And when we look at these last 2 or 3 cycles, these green into spring into summer zones were very early in these bull runs with how much room to continue to go up. That's what we're looking at here. So we're right in here. And this one, obviously, I've talked about this a lot. This one was squashed a little bit by that Chinese mining ban, and also the price hitting over $60,000. That's it shakes a lot of people's idea about what's possible with a monetary or a monetary asset, when it's breaking the norm of anything that's ever happened before. So we had a little bit of a truncated bull market there, but what's happening now? This is what we all want to know. Kelly, where's the market going? Well, I can't tell you exactly where it's going, but I can tell you the data that is setting up for what it's indicating is most likely. That's what this is all about. So let's go ahead and continue on here, right here. Implications of high profit levels and sentiment thresholds. We are approaching the gray line which serves as the optimism or pessimism threshold for the crypto market, meaning optimism, if you're able to bounce on it, especially at this stage in the market where we're still showing incredible signs of strength for a bull trend. We're coming down. Some of these signals, and I've spoken about this time and time again, when we're looking at these charts, when we're looking at the price levels, when we're looking at all these patterns, we have to understand what part of the market cycle we're in. We have to. I just want to make sure, let me look at okay, volume's good. We have to make sure that we understand if a signal hits something during a bearish trend, that has different implications for price than if you hit that same mark in a bull trend. When you have things that are overheated and cooked and just high as they can be, that gives signal that you may not have the fuel to build more momentum to push higher. This is why we like to see periods when we're looking at the market. When we see this, we want this to happen so some of those signals can reset. And I've got another chart for you here in a second to exemplify this. But what we're looking towards is, okay, we're getting this blue line coming down to this gray line here. Now you see when we came down to this gray line here, right here at the top of this market, we're going into that bearish trend. When we did come down to it, this actually broke through and then came up to it and used it as resistance because we're in a bear trend. Well, we are in a very strong bull trend here, and having this come down, for me, signals that we are giving more room for the bulls to run. That's what this is about. We want to see the market shake people out. And unfortunately, whether or not you like to hear that, that's just the nature of how markets work. They're here to move the money from the impatient to the patient, and in healthy doses as well. So you don't want every single person betting long, even though if the market's going to go long, Everybody's leveraged long. That sets up the perfect opportunity. It's like, hey, this is not healthy. Let's move the price back a little bit. Let's reset some of these signals. And now it's much like if you say you're running upstairs. Every once in a while, if you want to have the same speed and endurance you did at the bottom of the stairs, once you get to the 13th floor, you're going to need to say, hey, okay, let me drink some water. Let me rest for 20 minutes. And then you'll have more energy and more momentum to build on that next stage rather than failing halfway up because you never took a break along the way. That's what we're looking towards right now. So when we see this right here, there's another thing talking about what's going on. Never has there been such a buying spree. This is the most bullish statement ever from the man himself, Willy Woo. See, never has there been such a buying spree by high net worth Bitcoin holders as has happened in the last 2 months with Bitcoin ranging from 60 to 70,000. To me, what does this say? What does this say to you in your strategy? Even if you're scared, everybody in the markets, I don't care if you got $100 million or 10 cents, markets are going to trigger your emotions the same way for everybody. That never goes away. The difference is the mechanisms, your understanding, just the general approach you're taking to the market starts to take shape once you've built up the experience and also the strategies to help limit your impulsive emotional moves. Because if we're ranging between 60 and 70,000, you have hyper retail type minded people that are looking at price. They're not looking at data. They get shaken out. And as they're getting shaken out with these moves between 60 and $70,000 Bitcoin, high net worth, large Bitcoin wallets, smarter players, people with longer time horizons are scooping it up. So all you're doing is selling, giving opportunity for larger players to only build their bags. And then as this runs away, you're going to be like, what did I do? Right? These are the guys holding between 100 and 1,000 Bitcoin, or roughly 6.5 million to $65 million in Bitcoin. And you can see here, look at this sharp increase. Where did that start? Question yourself on this. Where did this big impulsive move up start? It didn't start here. It started on this sell-off here. So what does this signal to you? Ask yourself, what does the data of the big players tell you about what you should be doing? Well, the question here is, okay, we came up to a high. Some people are like, oh, this is too high. I don't know what's going to happen. It just moved a little bit. They sell. And as they're selling, this huge amount of basically the sell pressure here, and retail is like, oh, it might be over. Maybe it's dropping to 30,000. And you just see smart money saying, this is a good level to buy because I see it going much higher. That's what we're paying attention to here. Even on this continued trickle here, we're still seeing a slight angle to the upside. This is as bullish as it can get. I mean, hit the like button, hit that subscribe button, ding the bell if you are ready for this market to absolutely run away. I've been stacking. I have not sold. The only positions I've sold are positions where I'm rotating from one coin to another, and I've marked them all out in the BitLab Discord in the Kelly Alpha channel. Really, I'm most focused on taking long positions here all the way through. I mean, all the way since I think it was back in here. Where is it? February 2nd, February 7th, which I think was roughly in. I guess it was roughly about here. I'm stacking positions. My goal is the majority of them, not all, the majority of them I'll be holding through at least February or March of next year. So I can also limit the amount of taxable income because once you hold past 12 months, it's a long-term held asset. It's all about this. It's a financial strategy game these days, and how you're managing every bit of what type of position you're holding, how long, when you're moving, and why. Because a lot of times you can actually save yourself the stress and also prevent having huge 40, 50% reductions in what you could be making because of the taxes you have to pay on it because you're getting in and out. Now, I do have a trading portfolio I do as well, but the majority of my positions right now are these longer term held coins. And we're seeing large money buying into this chop zone. This is that chop zone he's talking about, 70 to 74, really, to 60,000. Big money stacking into this because most of us that have been doing this for some period of time can look at that macro signal. Where's it at? Can look at this macro signal, understand that there's the likelihood of higher is much stronger than this being a completely different cycle and breaking down from here. Now, why is that? Why is it more likely to go up than down? Well, when you just added, think about if you had like a car. If you added 4 turbos, you have a front engine and a back engine, and you have better tires. That's essentially what's happening right now when we're adding BlackRock, when we're adding Fidelity, when we're adding Morgan Stanley's adding exposure to the Bitcoin ETFs to their funds. We're seeing Hong Kong add Bitcoin spot and Ethereum spot ETFs. And the list is just going longer and longer. I even saw a post today that was suggesting that I know there's some potential limitations on the Hong Kong ETFs of the Chinese retail not being able to have access to it. But I saw today that it looks like they're starting to make some headway towards making those funds available to Chinese investors as well. That would be an astronomically huge amount of capital that would also be able to have access to these assets. So when we're wondering where it's going, we see, just like in previous cycles, we've had large run-ups, some sell-offs and up. In this case, we just had a consistent chop along the way. If I had to guess, this cycle will be more likely marked by having some fractal similar to this than we did in this cycle here. Now, these things could change. You know, US economy, what's going on globally, geopolitically, all these things can have impact, which is why we stay adaptable to the data as it comes and moves each day. Now, this just reinforces that chart from Willy Woo. It shows right here, on-chain data shows Bitcoin whales stacking like mad right now. I mean, look at this, just absolute stackage all the way into this run up here. Whales don't stack into the top. They stack into positions where they think there's going to be gains over time. So this is given my idea, my analysis of this area as actually building a position for another large leg up. Now, does that mean we can't go down? We absolutely can go down. And I can't remember if I have it here. I just reshared it right here. Joshua Jake, our boy, says right here, warning, Bitcoin can drop. He said, we'll probably drop to 69.1 before moving higher. This this doesn't have to happen, but there are a lot of positions, these long liquidation levels that have basically started propping up just below where we're at now. So it wouldn't be out of the question for the price to make that move. What would that look like if we move down to 61.9? So where we're at right here, let's go into the 2 hour. Okay, now let's take a measurement tool from where we're at right now. Where is 61? Look at this. So coming down to this line right here, this trend line that we have, that we've bounced, support, 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 resistance, support. This would not be out of the question for the price to come all the way down here, and that would be a 7% move. But I'm on the fence of that not happening. I'm on the fence, like Josh had indicated, 61,000 would be right. Basically, look at this. It would be testing this previous resistance and basically reaffirming that this is support. And if we get a move slightly down below that to this previous range high, fine, it's all good. But we are starting to see the money flow pop up here on the 2 hour. We got on the 4 hour, we also just flipped bullish on the money flow, as we can see down here. We got the stochastics. Look at this, beautiful. This is what I was talking about with things resetting. Stochastics, orange line on the BitLab trim fuel, coming down and kind of resetting, now giving us a lot of room to move to the upside. Now, I have a couple other charts and we'll jump into some TA. So here we go. Bitcoin, I shared this, I think it was yesterday or 2 days ago. Yeah, 2 days ago, over the weekend. And this was a daily MACD, RSI, Bitcoin's first positive MACD in 50 plus days, broke above the 65 plus day RSI downtrend. The picture is certainly shifting here. So this is what we're talking about. This is from Kevin Svensson. We have this large position, almost starting to look like a falling wedge rather than a bull flag, which is also a bullish chart. And obviously we've already broken out of this and found a little bit of reset. But this chart right here, those of you that have been following my page, I also shared this on Twitter. This is showing, look at this flip of this MACD. This shows you the direction of the momentum, okay? Has two different moving averages, and it shows you when they're contracting to move down or when they're building up pressure to move up. And we just, on May 5th, have this flip bullish as well as RSI. Look at this downtrend, resistance, 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 and now have broken through this, giving us that first signal that that move was coming. And we got that move. Now the question is it just going to run away? The market's going to do everything it has to do to chop out here to mess with as many people as possible, but not you. You're not going to be chopped out because you're using strategy. And we look at this right here. This is from Mustache. It says, while nobody is, why is nobody talking about the fact that the stochastic RSI is at a level last seen in September 2023? This is exactly what I was talking about with those signals resetting. This is what we want to see. Coming back here, COVID crash. Look at this. Stochastics come down, reset, bounce, and this gave basically the foundation for this move. This pushed up, and basically came in here, was dealing with these previous range tops. We got this Bart Simpson pattern right here. It came down, formed a higher low, and on this washout, look at this, comes down, provides the springboard to bounce and make that next move up. And how big was this next move? I mean, this was the acceleration right here. This is what we're looking for right now. What do we see right here? We have this chop sideways, and this on this washout, holding these lows, holding all the way right in here. We can see the stochastics fully reset. And then what we get, a little consolidation. And as the strength started coming up, boom, we got that large acceleration of bullish momentum to the upside. Incredible. Now on this move down here, look at that. Had another acceleration. And even though the price is higher, this is what signal resetting looks like. The price is higher and the signals come down and form a new low, giving rise to an indication that we're likely in for a very large move soon. It doesn't have to be today or tomorrow, but even right here, you see on this reset, we had a little bit of consolidation. We got above this moving average, and then that's where we launched. So as we stand right here, look, we just bounced on that moving average, but this is reset. And, you know, if I had to guess, it'd probably be around the end of the second week, maybe the third week of May, kind of taking advantage of so many people that are out there that say sell in May or walk away. I think this time, I do think this time may be a little different because of all these new capital flows that come in to the market, that have come into the market, and giving rise to new adopters to come in at an accelerated pace. We got some charts here. It's just Instagram or Twitter, but there's so many. I mean, all these different things just indicating. And I wanted to share this with you all, but I might just ask you to go and watch it because it's 5 minutes long. Go and watch this tweet that I have. Game of Trades, I retweeted them. It's talking about what smart money is doing. Actually, let's go ahead and let's do it because this is very valuable. This is going to give us indication about what's going on. This is going to give us indication about what's going on with those pressures, that strong correlation between the stock market and Bitcoin. So let me know if you guys can hear this.
Jeff Bezos, Mark Zuckerberg, Peter Thiel, all examples of billionaire corporate insiders that were selling their stocks in March of 2024. Once again, corporate insiders have timed the market perfectly. They sold their shares right before the stock market dropped by around 6%, wiping out around $2 trillion of market cap in just a couple of weeks. This is a chart that we highlighted back in early 2024, and it showed the highest level of corporate insider.
This is something that I even spoke about as it was happening. Mark Zuckerberg, Jeff Bezos, they were, even Jamie Dimon, sharing huge, hundreds of millions and in some case, billions of dollars worth of those stocks. And you know what we see? We did see that pullback in the market. So what does it mean? What are we looking for?
Insider selling over the last year. The chart we showed to our members right here, and it turns out they were right again. Anybody paying attention to them would have avoided this steep correction on the S&P 500. The question is whether they sold at the top of a small 6% correction or a large 25% bear market like in 2021, or like they were selling back in 1999 when we know that there was a historical amount of corporate insider selling before 50% drop in the stock market. Now, first of all, this correction was predictable. The S&P 500 had gone 154 days without touching its 50-day moving average, which was an extremely long streak that has actually rarely historically happened. At the same time as this was happening, you had interest rates that were rising. The 2-year yield that you see on this chart went from around 4% in January of 2024 all the way to 4.7% by the end of March. So the lower interest rate environment that we saw between October of 2023 and January of 2024 that pushed the stock market higher for a huge rally completely reversed in the first quarter of 2024. So there was a divergence between what the stock market was pricing in and what interest rates were expecting.
This goes back to what I was saying about you don't just look at the price of the assets. In this case, some of you might be like, I want to look at the Bitcoin chart. I want to look at my Aerodrome chart. You look at my Ethereum chart. If you're not paying attention to these broader signals, the data, the underlying data that can signal what direction the market may likely move, then you're doing yourself a huge disservice. And maybe you're looking into it is just met by coming and watching us here on BitLab Academy. I try to bring you as many data signals as possible, but let's continue on with this because this gets very interesting.
expecting. This was even reflected in something called the breadth of the market. In late 2023, 90% of stocks were trending above their 50-day moving average. And yet by March of 2024, that came down to around 75% of stocks. So although during that period of time, the stock market was rising, the number of stocks that were participating in this rally was going down. Now that just explains why we were looking for a correction in March of 2024. Corporate insiders don't really look at this kind of thing. There's a few reasons why insiders sell. They might think their company is too expensive, and so they don't think it's worth holding those shares. They might have access to data that's suggesting their company is going to see weaker numbers in the next few quarters, or they might think that the stock market is just temporarily too optimistic about the performance of their company. This is what we think was going on in March of 2024. The S&P 500 rallied by a staggering 30%. Most companies don't see a plus 30% change in their revenues. So corporate insiders were probably looking at their steady revenues, thinking that a 30-40% rally in their shares price was not justified and probably worth selling. Today, those very same stocks that were rallying in the first half of the year might be down 10-15%, with corporate insiders scooping back up those cheaper shares. For now, that's our base case and why we closed out our short trade on the S&P 500 last week, because when we look at the job market, we see that initial jobless claims are still trending lower. And as long as initial claims stay at low levels, the stock market could have more fuel. We see.
Now check this out. This is the data. Sometimes I see people in the comments when we're talking about some of these economic factors, jobless claims, interest rates. It has a direct impact on giving you signal about what's coming. Look at this correlation between the initial claims and the stock market. And okay, of course, we're ultimately most focused on Bitcoin and the crypto market. But I've shown you over and over again, there's a strong, almost direct correlation between the directionality of Bitcoin and what's happening in the stock market, because it is a tradable asset on the global stage, right? So you have to take into consideration that there is a lot, they're all tied together. They work in concert with each other. So what does this mean about where we're at right now?
Back in 2008, the vicious bear market that led to the financial crisis really began when initial claims began to trend higher. In 2000, the top of the market that led to a 50% decline started when initial claims began to rise. That was also the case in 1990. The bear market only began when initial claims started to rise. When we rewind all the way to the 1970s bear markets, like in 1970, 1973, and in 1982, all of these bear markets were accompanied by rising initial jobless claims. And the only bear market that did not occur with rising jobless claims was in 2022, when initial jobless claims were still at very low levels. So the fact that initial jobless claims are staying low today is telling us that this correction on the S&P 500 is probably not going to lead to a massive bear market and could end up being quite shallow and lead to higher highs until we finally do start to see initial claims.
That's what we want to hear, right? But let's listen a little further.
Move higher, and that lead to a more significant correction on the S&P 500. When this happens, we would expect the stock market to decline by well over 30%. But today, the S&P 500 is in a solid technical structure. It broke out of a key price channel in early 2024, and the S&P 500 is now just retesting this key level of support without any solid signs of a recession materializing. So our base case today is that insiders sold here in March of 2024 because the market was too overextended, not because they were sniffing a big crash that was coming like in late 2021 before this 25% drop in the market. That's why we've slowly been adding equity exposure to our list of trades at Game of Trades, because we think there's a good chance that the market holds this key level of support. If it doesn't hold, however, and the market breaks down, the technical structure of the market takes a big hit and opens the door for much more downside in the coming months. We're watching these technicals very closely at Game of Trades. Don't forget, you can join our...
So that's what I'm looking towards right now. I'm looking at not only Bitcoin, as we talk about on a regular basis, but let me actually open up another trading view window and we can look at those traditional markets real quick. And then we're going to do some TA on Bitcoin and Ethereum and some of the other coins that you want to see. And then we'll close that out. So we still got quite a little bit of ways to go. Stick with us here. Hit that like button, hit that subscribe button, ding the bell. Let's look at these trad markets and see exactly what he was talking about. So if we come here to, where's this? Here's Spider. This is that level that he was talking about. We can actually delete this. But this breakdown here into this, look at this beautiful, almost triple bottom that's on a bullish rise right here, where we have a rising higher lows each time here. This was signaling that the bulls were defending this from breaking down. And this is looking like, look at this, we're testing this zone right here, but we're going to want to watch when this, if and when this does break down, if it retests this line at any point and starts breaking below this, this will be a huge bearish signal potentially for Bitcoin. So let's get back over to Bitcoin and talk about what we want to talk about. And I do want to say, make sure as you're trading and everything you're doing over the next, always really when you're in these markets and you, for instance, if you have long-term held positions, you need to be using something like Arculus, channel sponsor here. Shout out to them. Go to getarculus.com. It's my favorite hardware wallet. They are a sponsor, but even if they weren't a sponsor, this is my favorite hardware wallet to use because of the 3-factor multi-authentication, the awesome card that you have. That's all of it's on there. If you lose a card, it doesn't matter. All you need to do is get a new card and then load up with your seed phrase, and it'll basically load access onto that card. That card is just an access point. So this is, head over to getarculus.com and type in LAB10, LAB10 for 10% off, and make sure you're stacking properly and making sure that you're doing it safely. Now, let's talk about what the bigger picture is right now here on Bitcoin. We still have this is that falling wedge that we were looking at. I'm still watching for this level right here, ultimately. Yes, the $74,000 is a level we need to pay attention to, but we haven't even cleared some basic levels before we can even, consider that. You need to look at the levels step by step. And in this case, looking at where we're at right now, we're making strong headway. It looks very good. And by the way, I'm using my touchpad because my mouse is not working. So forgive me with my slow mouse movements. But looking here, we still have the money flow has kind of been chopping back and forth. But what I do like seeing right here is this yellow VWAP line here on the BitLab trim fuel. As it's come down, as it has risen here, the price action breaking through the zone on this retest down, I do like seeing that this yellow line is starting to arc a little bit, showing that there is likely support coming into this zone. We also have huge amount of volume here at the bottom, showing a defense of this level. Bulls came in here in droves, and we did defend this. It has come back up. What we're going to want to watch for is once we get, I would say, clearing about 64.8 into 65,000 on a clear break, and seeing volume is what I really want to see for that next move to get up here to $67,000. In fact, let's head over here to go to high block. I might need to log in, so give me 1 second. Give me log into this sucker. Will give us a clear indication about where. There we go. I just see if I can remember my password. Come in here, liquidation heat map. So this shows us clearly, even though we were just looking at price levels on the chart, this shows us those zones right above us. There's not a lot of liquidations in this $65,000 level. That's actually a good thing. It is scary. This is just like what Josh was talking about on that tweet, 62,500 all the way down here to 61.9. If we do move down and sweep into the zones, I am looking for the bulls to come down, if this does come down here, and be probably one of the last opportunities at this level. If we do push up, this is that level I was talking about. 67 is here, but mind you, here at 65.9, basically the $66,000 region, there's a lot of liquidations that have stacked into the zone. And so if we do push into this and we clear it, this will be a slingshot for further price action to the upside, getting us through that $67,000 level. So as we're looking at what's going on here on this price, this is exciting, but we've got that work to do. This work right here, right at 65,000, all those liquidations, which are just shy of this $67,000 region, which kind of makes sense because, why does it make sense? Because we have this bounce here, this rejection here, that support there, and that would be right in this zone. If we push up into the zone and are able to clear it, then this would be a clear indication of moving higher. Now, when we look at Ethereum is kind of doing, it's similar, same, but different, as they say in Thailand. What we see here is we have broken down rejection, came back up, rejection, came back up, rejection, washed out down to a new low, almost like a springboard, and have pushed back up. And now we're challenging this previous range low, which also was this range high. And this is the same area that we're oscillating right now, waiting for that concerted effort from the bulls to really take over. We do have a higher low right here, which is phenomenal. Ethan Smith, that's a funny comment. We do have a higher low here. So this is kind of what we want to see. But the problem with this is currently is that the VWAP is angled to the downside right here. The stochastics are angled down. The RSI is holding about the 45%. So this is looking good. This is on the 12-hour though. So what are we looking like on smaller time frames? We got to get this money flow back into the positive, back blue. We want to water the garden. We want this to flip back blue so we can see capital pouring in to drive price higher. As it stands right now, if we do lose this, I'd be looking for the price to come down to about 29.65 here. But if we are able to hold this and see how we're kind of squashed between this range, this price level, we're able to break through this. I think if we break through this, the move will likely be another attempt back up here at this $3,300 mark. And look at where these two lines cross. Line from here, we have this rising level of previous support that's now resistance, and they're crossing right here. So what would be pretty great if Ethereum started to make that move back up. But when we look at the Bitcoin chart, it's just giving us all these hopes and dreams. And then look at this: hopes, failure, hope, failure, weaker hope, failure. So we're going to want to watch, keep a close eye on Ethereum to the Bitcoin chart, because this is looking like, giving indication like it kind of wants to test lower yet once again. Let's go out to the 3-day chart, double click there, and look at that line. We're so far below that line at this point. See if there's another line, option T. Yeah, we've got some work to do here. It'd be nice if this would bounce at some point, but it's still looking fairly bearish on that chart. Now coming down to, let's take a look at Solana. We're on the 3-day chart, cancel. We're on the 3-day chart. Let's get into the 4-hour. There we go. Now these are levels that we were looking at, but we can delete these lines. This one's still valid right over here. 152, we're up in the 155 level. This is where we broke this downtrend. One was at 134. And this is actually looking, a little better than we saw on Ethereum, for instance. This is a level that we're really going to want to take on Solana. And this is, look at this, we rejected right on this line. So 159.32, plus or minus 15 cents probably. When price gets up in this zone, we're going to likely will even get another rejection, consolidate, and then have that break to the upside. But what line should we be watching for a break on the downside? We've already bounced on it several times. Bounce here, bounce here, bounce, bounce. Support, but this is looking a little weaker. We're going to want to hold this, because now look at this rising level of support. That is also this horizontal level of interest from all this price action. So this tells me that if this doesn't hold, we're likely going to be testing back down into this $139, $140 range. We'll have to reconvene from there, but we are seeing the momentum's rolling over, the stochastics kind of rolling over, RSI is fairly hot. So this is kind of in a precarious situation. If you're looking for a buy on Solana, over here was the time for a buy. If you want to buy now, I'd be waiting for a pullback out of this, or yes, it might sound convoluted here, but a push up and the break down where you get that next defense, a confirmation of a move before you go. But as it stands right now, this is looking like it honestly could go a little bit of either way. Yeah, see, money flow kind of flipped positive, but it's just neutral. Nothing's flowing in there. RSI is holding up here at the 74. I would like to see these reset a little bit for another move higher. Render, though, have been making some moves. Render, I think and I talked about this a couple weeks ago. I thought Render was going to cool off for a little bit and then start to make that move. Now, not only Render, but the AI plays himself. We are seeing, I mean, this is not a small move. All the way up here, this is, look at that, 50, all the way to the top of that wick, 57% move from its low at 670, 687. Now it's all the way back up here at 10 to 84. So we're going to want to pay attention to this, because we can see on the BitLab trend fuel, part of the BitLab trading stack, the money flow flipped positive, but this was also after we had 1, 2, 3, 4 8-hour candles in a row that were high buying pressure. You could see with these green, slightly green bars, and this has just persisted. One was a little bit weaker, but still high buy pressure coming in. Now, this does not mean it's just going to go up, up and away. I am looking for at some point, as we can see right here, look at this. We're coming right into that zone that has been an area of interest previously. If we do get a rejection somewhere in here, I'd like to see the price action essentially come right into this zone here. This would be a strong retrace, a bullish retrace, having the price action reject somewhere in here, coming back into this zone, having a little bit of trouble, and then breaking through. If we do break through this, then the story of the game is going to be pushing through this and finding support in this level before we have that continuation. But render's looking quite good right now. It's nice when you're seeing so many scary bearish charts on these small time frames. But then remember, we got to go back to these data. Big money is buying these zones. We also see, resetting those levels for the next move. We also see where we're at on the macro. Take advantage of when price action isn't just doing bullish things. In fact, the more long-term you look, then you will look at market cycle dips as bullish things. So it all comes back to the context of how you're looking at these markets and what your strategy is. If you buy and you just need it to go up because you bought, that's not how the market works. We also see Dot's coming into a zone that I think if we're able to break out on Polkadot of this level, and remember guys, if you haven't seen it yet, I did do two videos here a week or two ago, talking about all the Polkadot updates, and then also my price prediction for 2024 into 2025. I think Dot's going to be one of those projects that really blows people away with not only his performance, but also the utility that's going to broadly get accelerated and used because of some of those developments that they're doing. So Dot's looking kind of primed right now. Let's go ahead and move this over a little bit, and we can get this out of our way. Put this over here as another retest zone like that. And then where are we looking at right here? This is just setting up so beautifully. So we have this zone just above us that we're rejecting at. Boom, boom. We could potentially see a move down into this 692, which ultimately I think would be an awesome buy opportunity. But this is looking like it wants to make an attempt at this cross section of this descending level of resistance, right at this horizontal level of overhead resistance. If we can clear this, this will be an indication that we'll likely take that next move up, which will likely be somewhere in this zone here, 830, which, from where we're at now is another 15-16% higher, making those stair steps on the way up. Rise, retrace, continuation. That's what we want to see. As it is right now, it's consolidating. Some people want to call this a bull flag, but the price action sideways here is now, this is as far sideways as this is tall, I should say. So either way, this could go either direction, but if the market starts to generally move more bullishly, or a huge partnership announcement or something with Dot, which you cannot count on any project, you just look at the technicals. This is looking like it's trying to do the work to take a hammer to the ceiling and break through this to then take that next leg up. So we can pay attention to that. We can also do a fib like this. See, look at this. We're held right about that 786, as Army Piper calls it, the platinum pocket. We're really watching for not only a break of this 740, but 758, which is his previous range top. If so, then I think we're looking at coming up here between these lows and this 1.618, which, look at that, it happens to be right about where these highs were. So we've got some confluence on the fib and on levels that if we were able to take this out, that we're looking basically in the $830 to $850 range for the next stopping point to potentially then move higher. So I'm super bullish on Polkadot. I'm so bullish on Polkadot, and I told you all this a couple of weeks ago, I guess about a week and a half ago. I moved my entire in this alt portfolio that I'm sharing with you all. I moved my entire I moved my entire Cardano position to Polkadot. That was a move I was willing to make, especially because I'm up here talking about Polkadot with you on a daily basis. I said, you know what? And I don't dislike Cardano. I just saw the opportunity with what's coming on a roadmap that will likely drive things and help support bullish price action. I decided that I'm going to rotate that position into Polkadot and let Polkadot ride. And then as I DCA and put more money in the market or want to take profits on other things, I could put those into Cardano, because Cardano feels like it has a little bit of a barrier on sentiment with the broader markets. Even some of the Cardano community members are feeling somewhat truncated. Now, I love Cardano, but I'm looking at it purely on a technical level about what's going on. And Dot is just looking like, not only structurally, but what, as I said, what's going on with their updates gives me more, incentive is the wrong word. It gives me more of an analytical approach that is more likely to have a stronger run. So just take a look at that. Now, MATIC is also, look at this, comes down and it's kind of ranging here. Hopefully this will be a bottom. You know, I kind of got eaten alive on this with this drop, but I'm okay with it. I'm just letting that position ride. And as it stands right now, we want to see MATIC break above 75 cents to really start talking about those next moves to the upside. Now, why did I have this line there? I don't know. Okay, so there we go. Yeah, so we have this resistance and this support. In the event that this does take out this 75 cents, this is the next level I'm watching, 82, and then up here at about the 89 cent level. But this is looking a little precarious because this also looks a little bit like a bear flag, and I don't particularly want that to happen. Let's see, option T. A little bit of deviation, bounce, bounce. So this is what I'd be looking for. If this does break down, finding support somewhere here in the 64 cent, 65 cent mark, pushing up, finding support again, and then potentially moving to the upside if this is a longer consolidation. But ultimately, we're seeing on the 8-hour, the money flow is trying to flip bullish. It's trying as hard as it can. Stochastics have come down and reset. Came down to essentially a little trend line here on the stochastics. Maybe we are approaching a potential bottom on MATIC, but as it looks, I mean, on the different time frames, the money flow is still choppy. It's not giving strong indication. Even look at this on the 2-hour. It tried, and now it went bearish again. So everybody's waiting on the signal from the big dog about what direction this is going. So all I have to say right now with these big, where did it go? With these big liquidation levels, why did that log me out? Oh, here we go. With these big liquidations below us and above us, the market just feels like it's still trying to just rebuild the sentiment, because when this thing starts going, it's going to move big. It's going to move exciting. It's going to be great. And so again, I just wanted to shout out Galactics, and I'll be dropping a post today in my Twitter. It's going to be a very exciting partnership I have with them, and I'm excited to be able to share it with you all. And again, and make sure you head over to getarculus.com, use lab10 for 10% off your Arculus and have the best hardware wallet in the game. And I will be in Discord this afternoon sharing some more charts, sharing some thoughts, and jumping in with you guys. I love you all. I appreciate you. I got to go for now, but I hope you all have a wonderful day. Hit that like button, hit that subscribe button, ding the bell. That's all I got. Adios, muchachos.